Welcome back to The Explainer. Today, we are diving into something folks usually dodge like the plague. But look, we've got to flip the script here, because this isn't about planning for the end. It's about building and protecting our legacy. We're looking at life insurance as the ultimate wealth-building cheat code. We are going to break down what it actually does for your family, completely bust the myths about how much it costs, and figure out your exact number without all the guesswork.
Here's how we're breaking it down today. 1. The 500K question. 2. The price tag myth. 3. The 5 jobs. 4. The coverage gap trap. 5. Finding your actual number with the dime method. And 6. Term versus permanent. Let's get right into it.
Section 1. The 500K question. Before we even talk solutions, we really need to talk about survival. Ask yourself this: if your paycheck just stopped tomorrow, permanently, how long could your household actually keep the lights on? And I don't just mean stretching a tight budget. I mean how long until the mortgage is late, the car note is behind, and somebody you love is forced to make desperate decisions during literally the worst week of their life.
Man, looking at this LIMRA data for 2026, it is a massive wake-up call. They asked American households that exact question. And get this, 1 in 5 said they'd be in severe financial trouble inside of 30 days, just 1 month. Another 41% said they'd be struggling within 6 months. Put that together, and that means over 60% of households are completely exposed. And let's be real, 6 months of runway, that's not just a rainy day situation. That's a we might lose the house kind of problem.
Moving on to Section 2, the price tag myth.
So why do we skip getting covered? Honestly, it's usually because we think it's just way too expensive. But LIMRA found that adults 30 and under overestimate the cost by 10 to 12 times. People legit think it's hundreds of dollars a month. But here is the reality check. $500,000 in coverage for a healthy 30-something, it's roughly $31 to $47 a month. That is literally one DoorDash order. Think about it. We gladly pay to insure our phones, our cars, but the asset funding the whole lifestyle, which is you, is out here completely uninsured. It's wild.
Section 3. The 5 jobs.
Once I realized the cost wasn't the issue, this whole narrative flipped for me. We're not just buying a death benefit here. We are hiring a tool to do 5 very specific jobs. Job 1, replacing income. This buys our folks years of runway instead of just a few weeks. Job 2, clearing debt. Because look, mortgages and car notes, they don't just magically disappear. They land right on whoever is left behind. This wipes that slate completely clean.
Job 3 is covering final expenses, and man, this one hits close to home. A basic funeral regularly runs 8 to 12 grand. We have absolutely got to stop relying on GoFundMe links and fish fries just to bury our loved ones. Pre-planning means your family can actually grieve in peace, without begging for help in their absolute darkest hour. Now, Job 4 is all about protecting the bag. If the income stops, the 401k deposits stop. But worse than that, the surviving family becomes what they call a forced seller. That means they have to cash out retirement accounts at the worst possible time, eating all those taxes and penalties. Suddenly, 15 years of hard-earned compound interest is just wiped out just to keep the lights on. Insurance provides that cash cushion so the investments can stay invested.
And Job 5? Listen, this is the one. Transferring wealth. For a lot of our families, a life insurance payout is the very first true inheritance anyone in our bloodline has ever received. It transfers over entirely income tax-free, and it skips that whole messy probate court process. It literally acts as a generational reset button.
All right, Section 4, the coverage gap trap.
Now, I used to be that person thinking, oh, I'm good, my job has me covered. But standard employer coverage is almost universally just 1 or 2 times your salary. And the catch? That policy isn't even yours. The exact second you leave that job, whether you quit or get laid off, that safety net completely evaporates.
Doing the math on this was just wild to me. Say you make 80 grand a year, right? Your job pays out maybe 80 to 160,000. Sounds like a decent chunk of change, but pay off a $300,000 mortgage, cover the funeral, and boom, that payout is instantly gone. There is literally nothing left to replace your income. Even among folks who already have life insurance, the data shows 18% already know they don't have nearly enough.
Section 5, finding your number with the dime method.
So how do we actually find our number? Well, I learned about this dime method, and it makes it so incredibly simple. D is for debt, so add up your credit cards, car notes, student loans. I is for income. Take your annual salary and multiply it by the years your family would need it, which is usually about 10. M is for mortgage, the full remaining balance, because trust me, a paid-off house completely changes the game for your family. And E is education, whatever it costs to get the kids through school. You just add those 4 buckets up, subtract any savings you already have, and right there, that's your coverage gap. That's your exact number.
And finally, Section 6, term versus permanent.
Okay, so once you have your number, which policy do you actually get? Well, term life is pure protection for a set window of time, like 10, 20, or 30 years. It's super affordable, and it does its job when your family is the most exposed. Permanent life covers you forever and builds cash value, but it costs meaningfully more. For most of us in our 30s or 40s who are just trying to build wealth, term is exactly what we need. The play here is simple. Buy term and invest the difference in cost into your own portfolio.
There's a quote from the research that absolutely shifted my perspective on all this. It says, life insurance isn't a bet on dying. It's the floor under everything else you're building. It's the safety net that lets your family stay invested. It keeps a tragic year from turning into a lost financial decade for your bloodline.
So at the end of the day, the barrier wasn't the cost. $30 a month is totally doable. The real barrier was just not knowing our number. Do not sit on this, y'all. Hit the FGWIF calculator link below, run your dime numbers, and secure the bag for your family today. Getting this baseline sorted is really step 1 to true generational wealth. Now remember, this explainer is just for educational purposes. Always do your own research. But leave with this question. If the absolute worst happens tomorrow, are you leaving your family a legacy or a liability? Think about it. Catch you in the next one.